Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be comparing it to 10-year Treasury yields. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. Let's go ahead and jump in. So, obviously, we talk about the price of Bitcoin a lot. We have looked before at some types of correlations between other asset classes, namely the stock market. But it might be interesting to do a comparison between Bitcoin and 10-year Treasury yields. All right, so let me show you what I mean. So if we go look at 10-year yields, this is the orange line that you get, okay, all the way down here. What we're going to do is we are going to click on it, and we are going to pin it to a new scale. So let's pin it to the new left scale. All right, you get something that looks like that. Okay, and one of the things we can do in the short term here is zoom in to what's going on today. And after we zoom in, we want to talk about what has it done in the past, and is what it's doing today consistent with what it's done in the past? So we won't really dive into this. Okay, so if you zoom in, it's actually quite interesting how much these two charts overlap, right? And perhaps it would maybe be a little bit better if I looked at it on the daily time frame. Okay, so this is the daily time frame. And what you'll notice is that during this entire crazy mania phase that started back in, way back over here, arguably with the capitulation of both Bitcoin and these yields back in March, you can see a fairly tight correlation. They're fairly positively correlated. Okay, they're positively correlated. So if one's going up, the other one's probably going up as well. And what you notice is that they both go up, and then they sort of both rolled over, and then they both came down. And then they both went up, and then they both rolled over. And now what I find a little bit interesting is this. Price of Bitcoin's going down right now. The yields are actually going up. But, you could also make the case of causation, right? Is it what's causing what? Is there any cause there to begin with? For instance, here you could argue that the price of Bitcoin and Treasury yields more or less started going down at the same time, right? So Treasury yields had peaked here, and then on that the very next day, it came down, bounced back up, down, bounced back up, down. During that same time, Bitcoin was just dropping like a rock, right? And then Bitcoin started moving up a little bit before the Treasury yields did, but it still started moving up nonetheless. Over here, the highest point the Treasury yields hit was back over during the first local top at 67K, not 69K, and then it was sort of in a downtrend. And the price of Bitcoin has been in a downtrend ever since we hit 69K. But what is interesting right now is that Treasury yields are going up, Bitcoin's actually going down. So I think it's certainly interesting to follow this and see if Bitcoin follows the yields or if the yields ends up following Bitcoin. The other thing we should do, though, is we should actually zoom out some, okay? Because it's easy to look in on this one thing here locally and kind of miss the bigger picture. So if you zoom out, and why don't, at this point, I think it's safe to go ahead and switch it over to the weekly time frame. What you'll notice is that not all of the peaks tend to be corresponding with Bitcoin's peak. Okay, so for instance, this peak on Bitcoin's price actually happened after Treasury yields peaked over here. Okay, so the first one happened after. This one more or less happened right around the same time, right? So Treasury yield peak, Bitcoin peak. The third one happened after Bitcoin had peaked. So I don't think this is something you can necessarily take to the bank, but I have seen a lot of people talking about it around the cryptoverse, so I wanted to provide a little bit of input, right? A little bit of input. If we go look at local bottoms on here, it does tell a slightly different story that could be a little bit more reliable, right? Namely, when it has a local bottom, it tends to correspond to, a Bitcoin uptrend, or the beginning, or sort of the intermediate, or at least beginning to early intermediate phase of a Bitcoin uptrend. So you see this local bottom here had this amazing market cycle for Bitcoin. This local bottom here, from that point on, it was I mean, it was just roses, right, for many, many months. And then another local bottom over here. And, you could argue that we're still in this uptrend phase. Now, of course, it's unclear whether this local move on treasury yields in the short term is going to be relevant or not. But I would argue that it's certainly possible that we're at a phase like that, sort of in the intermediate phase, and that we could still have further to go. Obviously, you guys know my thoughts on the matter. Wanted to at least talk about this. Another thing I wanted to mention is that when talking about correlation, and you think about like stocks and bonds, a lot of people might look at stocks and bonds and assume they're always negatively correlated. That's actually not true. If you look at all of history, there is actually some positive correlation among them. But if you look at over the last, say, several decades, going back to the 80s, then they are more negatively correlated. But during periods of high inflation, every asset class tends to get more correlated with every other asset class. Okay, so remember that. During periods of high inflation, a lot of assets just become correlated because everything's being, somewhat inflated. Okay, so do keep all that in mind. I thought this was an interesting metric to look at. I know I'm certainly not the first person to talk about this. I've seen a lot of other people talking about this recently. So I just wanted to kind of look to see what was going on. How reliable can it be in predicting peaks? I don't know if it's that reliable as you've noticed as I just showed, right? This one came well after the peak. The one before that one came at the peak. The one before that one came well before the peak. Perhaps the local bottoms on it are a little bit more reliable in terms of trying to identify a Bitcoin uptrend than anything else. All right. So do keep that in mind. If we zoom out, actually, one more time, obviously drawing trend lines is not my specialty. But perhaps if we were to come back up all the way up here, then then that could be problematic for a lot of asset classes if it reaches back up to this point. And it could come after the top for Bitcoin. Of course, this is assuming that 69K is not the top. So hopefully this has been at least somewhat useful. Okay, I don't mean for anyone to take this to the bank, but it is at least somewhat interesting when you zoom in and look at it in the short term. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up. Also, check out the premium list into thecryptoverse.com. Thank you for tuning in, subscribe, and I'll see you next time. Bye.